It tells me that, look, the markets expect 25, and that's the right approach. If you look back in history from 1990 to present, whenever the Fed's cut 50 basis points as the first cut, we've had a recession. 2001, 2007, 2008. Whenever it's been 25, we haven't had a recession. So 25 is the right kind of move. I think the market understands that. It doesn't make the tension between a slowing economy and stock fundamentals any easier, though, and hence the volatility that we're going to see.
That's a really, really interesting data point. Let me kind of flip it around, though, and say, okay, if Jensen Huang hadn't spoken yesterday, if we were down 800 on the Dow, right? How is AI? I mean, I think in some ways AI is quite obviously trying to rescue and lengthen and whatever you want to say the business cycle. And it seems silly to talk about, but maybe in a microcosm, that's what's going on. As long as it's continuing to this investment cycle, then the Fed probably can go 25 and everything's okay.
One hopes for sure, but we still have to worry about the labor market, particularly. If you look back at the classic signal of a recession, it's always been 2 consecutive months of job losses, and we haven't gotten there yet. But the job numbers have been so wonky that it's a little bit hard to tell in real time if we are seeing a negative print, because it could get revised negative. So we also have some informational issues as well to this market, adding to the volatility.
Nvidia acquired a new bull on Wall Street when William Blair began coverage of the stock with an outperform rating, citing the company's leadership in parallel computing and its strong position in the AI industry. According to the company, Nvidia has a rich and distinguished history of developing parallel computing systems, which has aided in its entry into a number of quickly growing markets, including high-performance computing, HPC, gaming, and the automotive industry. According to estimates, Nvidia's data center revenue increased by 217% in the fiscal year 2024 and is expected to grow by 132% in the subsequent year, reaching over $110 billion from just $15 billion in the fiscal year 2023. William Blair claims that Nvidia's system-level approach, which has helped the company go from a $100 billion GPU total addressable market, TAM, to the $800 billion semiconductor and $1.6 trillion cloud services sectors, has been a major factor in the company's success. The company's noteworthy acquisitions, such Mellanox and Cumulus, have enhanced its networking and systems engineering capabilities. The statement also highlights Nvidia's vast software ecosystem, especially CUDA, which boasts more than 5 million active developers. Because of the rapid rise in demand for AI products, the business estimates that Nvidia's gross margins in fiscal 2024 reached 74%, which is much higher than its regular range of 50–60%. Part of this increase can be attributed, we believe, to Nvidia's own 2-year advantage over competitors in AI accelerator performance. The business attributes this increase in profits to Nvidia's technological leadership in AI performance, as well as its integrated solutions, like the DGX product line, which contributes significant intellectual property throughout the entire its stack. William Blair believes that the stock will continue to rise, citing Nvidia's strong sales and earnings growth. Based on 2025 projections, the shares are currently trading at 30 times P/E and 32 times EV/FCF. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Now, for everybody here, this is an extraordinary time because in no time in history has computer technology not only moved faster than Moore's law. I mean, Moore's law, for example, over the course of a decade would be about 100x. We are probably advancing at somewhere near 100.
That was our other neighbor in Hawaii, Gordon Moore.
Oh, is that right?
Great person, great leader,
great person, and so we're at a stage now. We're in an era now where we're moving way faster than Moore's law, and are arguably easily Moore's law squared. And the reason for that, of course, is at every single layer, computers went from CPUs to GPUs, from human engineered software to machine learning software, and now this feedback loop that allows us to create new AIs, and these new AIs are helping us create new computer systems. And these new computer systems are advancing at such incredible rates, which allows us to create even better AI. That feedback, that flywheel is really flying now. And so I think the progress that you're going to have with agents over the next year or two is going to be spectacular and surprising.
We came into Chris' optimistic thesis on Nvidia on the Multi-Bagger Nuggets Substack. This will examine the NVDA thesis put forth by the bulls. The share price of NVDA Technologies Incorporated was $119.10 as of September 13th. As anticipated, Nvidia's triple-digit percentage sales growth has slowed, but it is still very good. The company expects the acquisition of Blackwell to increase sales in Q4 2024 and Q1 2025. A normalized 5-year period that encompasses the pandemic is used to assess Nvidia's return on invested capital, and the results demonstrate strong performance. Its ROIC of 54.77%, which represents an approximately 3% rise over the preceding 5 years, is indicative of strong capital efficiency. Although Nvidia's price-to-earnings (PE) ratio of 55.97 may appear high at the moment, it is currently approximately 31.5 going future due to a recent price fall. Although this isn't exactly cheap, it makes sense in light of Nvidia's more successful business. Nvidia's forward PEG ratio of 31.46 is highly discounted when taking into account its anticipated 120% earnings growth this year. This amounts to a PEG of just 0.26 for 2024. This figure is quite appealing because a PEG of less than 1 is thought to be cheap. Actually, considering that earnings are predicted to rise by 119%, Nvidia's valuation has climbed rather than declining. The company's potential for long-term growth is enhanced by its ability to consistently outperform expectations. Aswath Damodaran, a renowned valuation researcher, appears overly cautious in his latest evaluation of Nvidia, which is $87, 17% less than the current price. Likewise, his initial projections undervalued Nvidia, and the company outperformed them. In light of these factors, Nvidia's statistics demonstrate that it is not in a bubble, and the company is still a good buy at these prices. When William Blair began monitoring Nvidia, he gave the company an outperform rating. According to the business, Nvidia's data center revenue is expected to surpass $110 billion, up from $15 billion in fiscal 2023, with growth of 217% in fiscal 2024 and an expected 132% in fiscal 2025. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
A lot more like onboarding employees than writing software. So I think the ambition of wanting to reinvent computing to create what we now know is such a great endeavor. So somewhere between the being inspired by all the stimulus, the incredible challenge ahead of us, it's kept us propelled, inspired, and fired up for a long, long time. And now here we are. We now have the instruments, the tools, this capability called artificial intelligence that goes solve all of those other problems that we've been excited about ever since we were kids. And so that's pretty exciting times. Yeah.
It's a summation of that whole thing, right? Because now that I know, like, you were there when the TRS-80 Model 1 was there, and we were at Radio Shack, and we're working on that, BASIC, and then we're moving into the 6502 computers and the Commodores and the Ataris and the Apples and all of that, and then all of a sudden we're into these mini computers and mainframes, and now all of a sudden we're in this, like, next generation systems that can do things that we could have never imagined. And
that's right.
If somebody had asked us when we were in high school to start programming on those things, we'd be like, whoa, how could that be?
Yeah, unbelievable times. And so I think for all of the industry, this is what we're all fired up about, because we're now seeing it. And we get the benefit of being inside the industry, looking at the early indications of all this work. And I'm excited to be here today. helping to celebrate the beginning of the enterprise AI era. This is a big deal. Don't forget, we say enterprise is the name of an industry, or but the fact of the matter is, this is how society is built. This is how industries are built, and we're gonna bring a level of automation capability that the world's never seen.
It's no secret that the excitement surrounding artificial intelligence, AI, has caused the market to soar to all-time highs during the past year, particularly for technology equities. It is also no secret that there has been unprecedented buying activity in the semiconductor stock Nvidia. In fact, the company is currently the third most valuable in the world, according to market capitalization. Is Nvidia stock going to soar much higher, though, considering that shares have increased by 160% over the last 12 months and by 140% thus far in 2024? Below, I'll examine a few items that could support the predictions about Nvidia's stock price movement in the following year. Let's take a closer look at the wider picture and identify potential influences on Nvidia's trading action. Finally, I'll share my forecast for the price at which Nvidia stock will trade in a full year. Over the past few years, one of the main drivers for the semiconductor industry has been the need for graphics processing units, or GPUs. Large language models, LLMs, and other machine learning applications require GPUs for training. Most people now concur that Nvidia produces the best GPUs on the market, with its H100 and A100 CPUs among its hardware lineup. Some of the largest companies in the world use it. Furthermore, following a brief delay due to a design flaw, Nvidia's next-generation GPUs, the Blackwell series, are set to hit the shelves. During Nvidia's second quarter fiscal 2025 conference call, CFO Colette Kress said, "We expect this to continue into next year. Demand for Blackwell platforms is significantly above supply. Blackwell should generate several billions of dollars in sales in the fourth quarter, according to Kress. With Blackwell's high levels of demand, I think it's reasonable to predict that most of these revenue tailwinds will carry over into fiscal 2026, calendar year 2025. As such, I wouldn't be surprised if there was a spike in purchasing activity for Nvidia stock in the latter part of 2024 and the first few months of 2025.